it's been fun to see all 12 decks of the Norwegian Sky. This specific ship was built in 1999. It just underwent this huge renovation. Some investors, will say, why put so much money into investing in this fleet? Why not retire the old ships and just bring on new ones?
Well, she's not that old. She's less than 20 years old. And for less than $100 million, we've now made her better than new. To replace this vessel would cost nearly $700 million, and we'd have to sit on and wait maybe 5-6 years before it would be delivered by the yards. So we think that from an ROI perspective, it's exactly the right thing to do. It brings relevance to the fleet. It homogenizes the entire brand. And, you're only as strong as your weakest link, and we want to make sure there are no weak links in our Norwegian Cruise Line's lineup.
Despite all the negative headlines, the Viking ship and whatever it may be, about 30 million passengers are set to cruise in 2019, up 6% from the prior year. These new renovations you're doing, are you going after new cruise passengers or the ones that are staying loyal to the brand?
I think both. For the Norwegian brand, for example, on any given cruise, 40% of the guests are repeaters with us. So the lifeline of a cruise line, of a brand, is the combination of your repeaters and new to guests. But what this renovation does is it extends the life of the vessel to a level that continues to allow the ship to generate top yields. And this is a fixed cost business. So the higher the yield, it all drops to the bottom line.
Norwegian is not the only one that's putting a lot of money towards refurbishments and renovations. Royal Caribbean, Carnival, your big peers are doing the same. At the same time, you're bringing on a lot of new ships to market. There's a concern that there may be an oversupply, too much inventory.
Yeah.
Is that a concern?
No. You know why the industry only grew 6% last year?
Why?
Because we only added 6% more ships. We are capacity constrained. Certainly my brand is. We only have 16 ships in the Norwegian brand, 10 ships between Oceania and Regent, and I can reel off a dozen or so either unserved or underserved markets that we don't participate in simply because we don't have enough ships. And that's why we have 11 ships on order, with the first 2 coming Encore in November of this year, Norwegian Encore, followed by the Regent Splendor in February of 2020. So we're very excited about those 2 new additions.
And the cruise stocks have done pretty well this year. Norwegian up in over 25% in 2019. But one of the bigger headwinds has always been fuel prices. Oil is now up another 20-30% this year. So how do you make the cruise lines or your ships more efficient so you can incorporate that?
First of all, fuel expense as a percentage of revenue is a relatively small amount, 7, 8, 9%. So I would tell you that fuel is an irritant. We'd rather have lower fuel prices and higher fuel prices, but it doesn't determine the overall profitability of a company. What determines the profitability of a company, of a brand, is do we have pricing power? And we do. Partly because of the great value that the industry offers, partly because of these fantastic new ships that we're bringing online, the renovations of ships like this, and the exciting destinations that we go to. This vessel tomorrow will be in Havana. The pent-up demand that the American public has had for Cuba for the last 60 years is tremendous.
But will that continue to be a growth market given the political tensions between Washington and Havana?
I certainly hope so. I hope that after 60 years, the 2 countries would learn how to get along.
Yeah.
And I encourage both sides to do so.
Yeah.
But Cuba's a great market, and we hope to continue participating.